Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. We can't really call in the doldrums of summer because we're getting closer to fall, but it is August, so sometimes there's not a lot of things to see that excites us about the month when it comes to the cattle trade. But we're going to take a look at what might be the inspiration out there. Labor Day demand is coming up. What's going on in the South when it comes to grade of cattle, and what's our current numbers looking like? It was kind of a macro kind of day, is how Brad described it to me, with a lot of red on the screen, both from a grain but from that livestock perspective. So we got a lot to dive into today as we kick it off. As you can see, Brad Kooima is joining us. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. So you talked about a macro kind of day, and it was a feel that we saw really on both sides of the aisle.
Right. I think that's the right place to start, Susan. Thanks for having me on, by the way. Because, it started out with the downgrading of the U.S. debt from AAA to AA plus. We haven't been that rated that way for a long time. And do I understand exactly what that means? Of course not. I'm a cattle guy. But I mean, what the impact of that had, I thought, on some of our broader financial markets was very obvious. What was happening with the bond market, what was happening with the stock market, et cetera. And I think that influenced almost all the commodities. I had to look long and hard today to find anything that was actually even higher. Obviously, our livestock and grain stuff, but crude oil, a lot of the softs, metals, energies, all this stuff seemed to be, so sometimes that's contagious and for a reason. Somebody might say, well, so what if crude oil is lower? What does that have to do with cattle? Well, don't forget that there's a lot of these index funds that trade all of the similar rated stuff, and so as stuff starts to go down, that influences more trading and all the stuff that's within those different indexes, commodity indexes, and so it's real. But maybe tomorrow's another day, and the stock market has been like a cat with 9 lives. I'm not a real stock trader, but I look at it and I've been amazed over and over how the market seems to be able to shed that bad news. And one of the sustainable bull markets that we've had for a long time. So we'll see. It's had quite a bit of resiliency, but the Fed told us the other day that they weren't worried so much about a recession anymore, which got my buzzer alert going. I thought, whoops, I hope that's not one of those. Wished I hadn't said that sort of thing, but yeah.
Yeah. So a midweek where we see a lot of negativity after we had some decent gains earlier in the week. Can today just be that little midweek hump, and let's hope for some higher numbers to finish out the week?
Well, we talked about that today. Which was the fluke? Was yesterday's sharply higher deal? Monday, not a good day, come roaring back the first day of the month. Right. What looked to be like maybe some fun buying, re-entering the position. We saw a big drop in the open interest on the cattle the last 10, 12 days, which gives them some ammo, some powder. Is that what we saw yesterday? That's kind of what I thought, and then today maybe we didn't quite have the buying power here today because of what was going on in the stock market and that sort of thing. I remain fundamentally friendly. It's the second day of August. We've gone from Father's Day to here, and what have we done? We've had a new high made in the cash cattle market. Box beef market, in my opinion, has probably put a temporary bottom in. The next move is going to be, like you hinted at, the Labor Day demand. Don't forget that was the reason why there was nothing to be found after Holcomb fire, right? It was, even though we killed a lot more cattle, the beef went up anyway because it was Labor Day. Sorry, a little note of bad attitude, sarcasm by me there, right? So anyway, no, I do think that some of the guts of the market still remain, to me, very positive, and many indications that we're still very current. Both weight and grade would tell us a little bit of that story, I believe.
So even though we've seen some negativity in the futures, could there be some positivity this week for this cash market?
It feels to me like yes. Really, I think it felt to me like if a guy wanted to, you could have got 187 here today on the right kind of cattle. Last week it was 186. I think if you and I had this chat on Monday morning at 7:30, I'd have said, boy, I don't know, Susan, steady at best. I think the Packers are going to try to get him lower. He's got some contract cattle. He's got some captive cattle always the first week of a delivery month like this one is. And we'll be, and 186 is a big price, blah, blah, blah. But I don't know. I think that with that big up yesterday, maybe the feedlot got a little more resolve, a little more bow in his neck. And I think you're going to be fully steady to a little higher, frankly, at least on the right kind of cattle, which is kind of hard to find because we are so current. Someone that's looking for a high finished, high choice or prime type deal, they're still hard to find, Susan.
So negotiated numbers last week Nothing to write home about.
Not a coincidence either, in my opinion. One of the lowest negotiated weeks that we've had in many, many weeks. And coincidentally, that's the week then cash is a couple dollars lower. I think the two go right, march right down the row together. When the Packer doesn't have to compete for very many, then the cash market usually slides. So now, what does it mean this week? Does he have to come back now a little bit and try a little harder this week? If it's not this week, I think it's next. So I guess, I think when you have a little leverage still like we do in the feed yard, because we're that current, I still want to have a little bit of enthusiasm.
So what are you seeing in the South? For example, Texas, you were reading off some grade numbers to me before we started the program.
68% choice and prime. National average is a little over 80. Once in a while they'll sneak above 70. I guess I mentioned that to you because I think it's an indication that they're selling cattle on time, that they're still chasing grade. Also a reason why the North maintains a premium to the South, because our cattle will grade better than theirs will. All things that are maybe not by themselves game changers, but are positive influences in the market, in my opinion. Now the weights have started to creep up a little bit, which is very normal. The thing would be that's not normal is that it's taken so long to do it. Even in 14, the big bull market that we all remember, the average weights had started up already by mid-June, and now here it is the 1st of August before they're started up. So the supply side stuff looks to me to still be pretty positive.
So we did have a question from a listener, and that was talking, I think you and I briefly talked about this last week, was some of these sale barns with these cow numbers are just through the roof prices that are coming in. So it makes it kind of hard. Do you keep that cow at home or do you send her to town because you might get that $2,000 plus for?
Well, I tell you what, you ask a great question here, and it's I've asked across the cow country of what they see. For instance, the big video that a lot of you watched last week, I just did some rough counting through there. Steer calves 88,000, heifer calves 22,000. Now I know it's always skewed toward the steers, but boy, now that's a lot now, 4-1. And I know that's the last thing guys typically sell are their heifers because they want to see what they want to do for sure, and all yada yada. But still, I hear two sides on that cow question specifically. Now, if you're in a regional issue like, say, Missouri, part of Kansas, where it remains critically dry, liquidation continues because they don't have a choice. But if to try to answer that question in that slot of, say, the Dakotas, Montana, much of Colorado, much of this western, northern, traditional northern cow country, I've been surprised that I'm getting a lot of, I'm 78 years old. I can get $2,400 for a cow, or pick your price, whatever. You know what? I think I'm just going to sell her. And, the average age of the rancher is very high. And yeah, he has to borrow money too. So I'm getting more increasingly feeling like this is going to be the slowest cycle that I've ever gone through in terms of from liquidation to expansion. And some of it's because the regionalization of it's not raining everywhere, but some of it's just because these guys are saying, you know what, I'm tired of all the stuff. I'm going to take my money and I'm going to slow up. And so I don't see that that's bearish. It's maybe if, somebody's disappointed that I'm not as all bulled up. We already got the cow herd at 52-year lows. We're short enough on the cow thing that the supply is going to be snug anyway.
And in some ways, it makes it difficult for these young guns to be able to get in there and build those herds that they want to have for future, so they can someday be that 78-year-old rancher.
No question. Every year they get encroached on by urbanization of the ranch ground, and yes, they've got a very tall task. Somebody will step up. They always do. And the cattle people are the best people in the world, so we'll figure it out somehow. But it doesn't hurt to make a little money. That'll incentivize us like nothing else will.
Yeah, no kidding. Well, thanks for joining us this week. Best way for folks to get a hold of you?
Hey, look us up, kkvtrading.com. Thanks for having me on, Susan.
All right. As we always remind you, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.